Hi, this is James Perry at Perry Capital in Miami. It's July 18th. It's Friday afternoon and the markets are closed. It's been a very good week once again. The S&P and the NASDAQ touched all-time highs today. Interest rates are very stable. The dollar is continuing its ascent as expected. Gold has stabilized. Oil is calm in the mid to low 60s. And crypto continues to be at all-time highs along with gold. As usual, we're going to tell you what's going on, what it means, why you should care, and what you should do about it. And we will start with domestic policy because for the first time in a long time, domestic policy seems to be grabbing all the headlines. Let's get going on that first. Domestic policy issues are dominating the headlines, and rightfully so. The market loves them and is making new highs because of it. Interest rates are stabilizing, the dollar's rising. Why? Very simple. Taxes are going down, deregulation is accelerating, the budget deficit is going down. The run rate this year looks to be on the order of something like $350 billion lower. The trade deficit is going down. The run rate on that for the year looks to be about $350 billion lower. Those two numbers translate directly to GDP. This is a very, very powerful move in the economy and for markets. The other thing is a lot of legislation is being passed. Trump's trade and balance bill actually has some very, very important subcomponents to it, which are extremely powerful for markets. Obviously, the donation of $1,000 per newborn for retirement is absolutely genius. Cutting taxes, of course, and deregulation are very good too. But I think the balanced budget and the budget deal is probably underestimated because one of the things that I think is probably the most important is that new business investment in this United States, in this country, for industrialization, businesses will be allowed to write off 100% of infrastructure costs in the first year. Imagine that. Imagine the power of that incentive. That's going to be really, really good for the economy. And the second thing that happened today is the passing of the so-called Genius Act, which is really quite long overdue. It's been held up by various government agencies and the financial system for years. What it does is it stabilizes and gives structure to the blockchain system that has been in place for over a decade. Stablecoins are backed by T-bills, and that, of course, will give a bid to the T-bill market. But the point is, it legitimizes the structure of crypto. And this is really strong for productivity. It's really strong for legitimacy. It's really strong for cleaning up the nefarious components of the crypto market. And I think it's really going to unleash another whole wave of the industrial revolution, which is AI. So again, markets making all-time highs for good reasons. We expect that to continue in the second half. The U.S. economy is doing well. All of the data in the last week supports that. Inflation is lower, retail sales are higher, the housing market's doing better, the labor market's doing better, and no surprise to see confidence rising at the corporate level, small business, and household. So in the context of markets, though, let's talk about the dollar. I know a lot of domestic investors don't really worry about that so much, but interest rate people do, and global guys like myself do. The dollar was highly criticized and supposedly sold off massively by allies and Axis powers alike March and April. That turns out not to be true. The BIS, which is the Bank of International Settlements in Basel, is the mother of all mother central banks, and they did a report that showed that most of that activity was hedging and most of it was from private investors. That's hedge funds. The dollar has stabilized, and the fact that when it goes down, it really goes down against the euro and the yen, and both of those areas have much bigger problems on a monetary and fiscal basis, not to mention inflation and growth than the U.S. economy does. So I've always thought that that was a little bit of a strange trade. And the BRIC currencies have gotten slammed in the last week or two for the simple reason that, Brazil, Russia, India, and China have governments which are not conducive to capitalism. And they also have totalitarian and ideological regimes which, frankly, their own people don't trust them, so very few foreigners do. So I think that the whole BRIC story is kind of a joke. I think the next new currency after the dollar will probably be the stable coin, which, funny enough, will be in dollars. So I think that the dollar has seen its lows for now. It really hasn't gone down very much at all. It's at 98.5, 99. I think the sort of 10-year average is about 100, so it's really hasn't done much. And interest rates haven't either. 10-year treasuries at 440 or 450 have been going sideways for over a year. So the idea that somehow foreigners are hurting dollars and selling dollars and the U.S. is uninvestable is nonsense. The flows into this country, both in public and private markets, has been phenomenal.